The US market staged a strong rebound overnight. Semiconductor stocks led the rally. As I've been explaining, the recent price action in the US market is forming a diagonal pattern. Looking at Nvidia from a primary wave perspective on April 7, 2025, I explained that the WXY ending diagonal pattern was approaching completion. Near the bottom, institutional traders could trigger one final shakeout. But after that, the trend would reverse sharply to the upside. A powerful bullish wave was expected to unfold. Micron also reached the final stage of its consolidation. The chart showed one last E-wave tail before the reversal. As expected, a strong rebound began right after the E-wave was completed. This suggests Micron could rally straight to its next major resistance level. Just as we anticipated, the breakout has now begun. At the same time, semiconductor stocks and the major US indices continue to move higher. As for our strategy, we've already taken partial profits on our leveraged positions. There's no need to worry about the core holdings. If we get another short-term pullback, we'll simply add to our positions. However, this isn't the kind of sharp decline we saw previously. Even if we classify this as an intermediate wave, it still contains its own internal 5-wave impulse structure. That means minor pullbacks can still occur within the smaller waves. But we're not expecting another major sell-off like the previous one. We're now entering an explosive phase of the rally. The path may differ, but we continue to expect strength through the end of August. One defining characteristic of a diagonal pattern is that it ultimately breaks above the previous high. Another rally comparable to the previous wave could continue for the next 3 to 6 months or even longer. Now let's look at the 4-hour chart of SanDisk. We have an ABCDE wave structure. From wave D to wave E, we can see an ABC ending diagonal pattern. As I mentioned before, a smaller diagonal is nested inside the larger diagonal structure. In my view, this is a deliberate shakeout designed to force traders in and out of the market. As expected, a strong bullish candle appeared right where we anticipated. This rally could quickly extend to $1,480. Even if we see a short-term pullback, it shouldn't last more than 1 or 2 trading days. From a primary wave perspective, SanDisk is expected to break above its previous high before year-end. We expect SanDisk to move above $3,000 by late this year or early next year. The long-term upside target for SanDisk remains as high as $4,800. Now let's look at SNXX, the 2 times leveraged SanDisk ETF. This also completed an ending diagonal pattern. It's one of the names we strongly recommended buying. In just one day, it surged by 83%. A decline on weak volume like this usually sets the stage for another move higher. That makes this a highly favorable setup. This is a good area to take partial profits. You can continue holding the remaining position through August. The stock has already reached our initial short-term target. A brief pullback is certainly possible, but the overall uptrend remains intact. Yesterday, I mentioned that we'd likely see a meaningful rally around the US market open. This is the 4-hour chart of SOXL. The rally remains exceptionally strong. Our near-term target is $150. A move into the $150 to $180 range could happen within a week. Reaching the previous high within a month is entirely realistic. This chart also follows the same ABCDE wave pattern. Just like SanDisk, another smaller diagonal has formed within the larger wave structure. That's the nested diagonal pattern I've been discussing. If you look closely at the price action, you'll notice the market kept shaking traders out right until the very end. It went through one final shakeout, before resuming its upward trend. This analysis is based on the 1-hour chart of SOXL. As we anticipated, the market made one final pullback before breaking sharply to the upside. There's also the possibility that we're now developing a 1, 2, 3, 4, 5 impulse wave. This setup supports another rapid advance through next week. Now let's move to the daily chart of SOXL. From a volume perspective, selling volume has already reached its peak. After the selling climax we discussed, buying volume has started to come in. At this point, you could say that nearly all of the selling pressure has already been exhausted. From here, SOXL is likely to trade with relatively light volume. Once this period of volume contraction is complete, we expect another breakout, supported by a strong surge in volume. In other words, after a gradual advance and one more pullback, an even stronger Wave 3 rally is expected to unfold during August. This is the daily chart of IREN. Based on the ABCDE wave structure, IREN could quickly rally back to the upper trend line. Following yesterday's strong rebound, the stock has already broken above $38. We continue to expect significant upside from here. Our first profit target is $50. The second target is $100. Ultimately, we expect IREN to climb above $180. This stock is developing within a very large long-term wave structure. What we're seeing now is simply intermediate wave 2 following the completion of primary wave 2. Even after this 5-wave advance, primary wave 3 will still lie ahead. In other words, even after completing a full 1, 2, 3, 4, 5 sequence, the long-term bullish trend will still have plenty of room to run. That's why I've continued to emphasize that this bull market won't end anytime soon. The recent correction lasted much longer than most investors expected. Because the correction felt so prolonged, the rally that follows is also likely to last much longer than many anticipate. This isn't a market that will finish with just a modest rally. Now let's look at IRE, the 2x leverage product tied to IREN. Since it completed an ABCDE wave pattern, this was a high probability setup for a powerful rebound. That's why we strongly recommended buying the leveraged IREN product. As a result, it surged by 88% in just one trading day. Even if you entered near the previous low, simply averaging down with proper position management would have brought your position back into profit. We continue to expect the uptrend to extend through the end of August. We also expect individual stocks to continue delivering powerful breakout moves. The US stock market is entering an explosive bull phase in the second half of this year. And this rally is only the beginning of a super cycle that could continue through 2028 and even 2030. Just as we've seen in previous market cycles, selected stocks could once again deliver gains of several hundred or even several thousand%. However, not every stock will participate. The biggest gains will come from stocks with healthy chart structures. That's why careful stock selection is more important than ever. Inside our membership, we continue to provide regular updates on individual stock opportunities. Be sure to join our membership so you don't miss the explosive opportunities we expect in the second half of this year. We hope you'll capitalize on this powerful bull market. That wraps up today's video. Thanks for watching.